Welcome to the Deep Dive. Today, we're getting into one of Canada's really hot topics, the GTA real estate market, specifically where things stand in mid-2025.
Yeah, it's a market everyone's watching.
Exactly. And for this deep dive, our goal is, to cut through all the noise. We want to understand the current state, figure out what's really going on.
And we're doing that by looking at a mix of things,
Right. We've got insights from, well, everywhere. Social media sentiment, like X posts, but also the hard web data.
Which is crucial, I think, combining those different angles.
Totally. The mission is to really decode this complex market. We promise you'll hear some surprising facts and get a handle on the dynamics shaping things right now.
And what's so valuable here is synthesizing all that, not just grabbing anecdotes or one data point. By putting together what people are saying, feeling, on social media with the actual numbers, we should get a much clearer, more nuanced picture. It's way better than just one source alone.
Okay, so let's start with that sentiment piece. What's the general vibe out there from people actually talking about the GTA market, especially on X?
Well, it seems pretty clear there's a strong bearish feeling dominating, right, as of mid-2025.
Yeah, definitely seeing that. Like we saw a post from @Shazigoli back in May 2025. They claimed the GTA crossed 30,000 active listings.
Which is a huge number.
Huge. And they described it as a liquidation, not just, a correction. Said buyers vanished and sales crumbling. I mean, that's incredibly strong language, isn't it?
It absolutely is. Paints a picture of massive inventory buildup and almost no buyers. Kind of a distress signal from some sellers, maybe.
Right. And then John Flynn Restats sort of backed this up, noting year-over-year drops in freehold average prices, down 4.3% in May 2025. And another user at TableSalt13, this was back in August 2024, mentioned average selling prices hitting on $1 MNE, down from that peak of $33 I mentioned February 2022.
Yeah, it really underlines that feeling, that price drops are outpacing any salary growth.
And even earlier, like 2023 posts, also from @JohnFlynnRayStats, were describing the GTA as a buyer's market everywhere. I think they pointed to Toronto having just a 24% sales to new listings ratio.
Wow, 24%, that's low.
Super low.
And didn't we also see at Run Mortgage Guy back in December 2024 pointing out mixed signals?
Yeah, that's right. Slight increases in unit sales and single-family home prices like up 5%.
But condos and townhouses were falling, and overall sales were still way below the multi-year averages. So it suggests, no real broad demand kicking in, even with a few bright spots.
So, okay, these X posts, obviously they're anecdotal. We need to acknowledge that. But they give us this really valuable, real-time snapshot of what people are feeling, what they're worried about.
Absolutely. They tell us there's this deep caution, maybe even bordering on panic for some people.
Yeah.
Buyers clearly feel they've got the upper hand. And sellers, they're feeling the squeeze from all that inventory and fewer people bidding.
So it's not just a slow market. It's perceived as, actively correcting, or like Shazigoli said, liquidating.
Exactly. Now, what's really fascinating here is how the more robust web data kind of lines up with this, or maybe adds some important detail.
Okay, so let's transition. Let's get into the hard numbers now, see what the data-driven overview tells us.
Right. So starting with home prices, the snapshot for the average home price in the GTA, this is for June 2025, was $11,101,691.
Okay.
And that's actually down 5.4% year over year from June 2024.
Down 5.4%.
But here's maybe the bigger headline. The MLS Home Price Index, the HPI, it's generally seen as a more stable measure, tracks the typical home value.
Right, less skewed by shifts in what's selling.
Exactly. That fell to $995,100,
Wow.
which is a 4-year low. And importantly, the first time it's dipped below the $1 million mark since March 2021.
That is a huge psychological benchmark to cross, isn't it? What is hitting that $1 million HPI mark? What does that mean psychologically for buyers?
For sellers. Oh, it's massive. I mean, for buyers, it might signal, okay, maybe the market is finally getting into a zone I haven't seen in years, could encourage some people off the sidelines.
Right.
For sellers, though, it really underscores how much the market shifted, might force them to, really adjust their expectations downwards. It's a very clear sign the peak is behind us.
And if we break down those prices by property type, for June 2025, are we seeing declines across the board?
Pretty much, yeah. Detached homes came in around $1.39 million. That's down 6% year over year.
Okay.
Semi-detached were $1.09 million, down just 1.2%. Freehold townhouses hit $966,000, down 5.5%. And condo apartments were $696,000, down 4.3% year over year.
So everything's down, but maybe some segments are seeing steeper drops, like semis holding up a bit better.
Seems like it. And if we look specifically at the city of Toronto, this is for May 2025 data, the average price was $1,012,800, down 4.5% year over year.
Okay, in the city itself.
Right. And within the city, single-family homes were $12,240,600, down 4.8%. Townhouses, $755,500, down 5.1%. And condos were $593,200. That's down a pretty significant 7%.
7% for condos in the city.
Yeah.
Yeah, that sounds like they're facing some of the biggest pressure.
Definitely seems that way.
But it's not totally uniform, is it? Like across the whole GTA.
Yeah.
We're seeing regional variations, too.
Oh, for sure. Some suburban areas got hit harder. Mississauga, for example, average price $993,959. That's down 11.7% year over year.
Wow, nearly 12%.
Yeah. And Richmond Hill, $1,302,226, down 12.2%. So sharp declines there.
But then you contrast that with somewhere like Vaughan, which actually showed some resilience.
Exactly. Vaughan was at $1,327,790, which is actually up 3.7%.
Good question. What do you think?
Well, it's clear that even though the overall trend is down, specific micro markets can, defy that. It tells us that even within a broad buyer's market, things like very specific local demand, maybe the mix of property types available, or just unique community features, they can create these little pockets of strength.
So you got to look beyond just the big GTA average number.
Absolutely. It might be a certain type of housing that's just really in demand there, or maybe local economic factors are playing a role. You really need to zoom in.
Okay, let's shift gears to sales and listings. The whole supply and demand picture. GTA home sales in June 2025, 6,243. That's down 2.4% from June 2024.
Down, but not drastically year over year on sales volume.
No. And interestingly, there was a slight month-over-month increase from May 2025. So could that indicate maybe a little bit of a spring recovery? Or is it just noise?
It's possible it's an early sign of some seasonal activity picking up, but the year over year decline is still there, right?
Sure.
So while it's a small uptick for May, the bigger picture still suggests sales are pretty sluggish overall. And despite that tiny sales increase, look at new listings. June 2025 saw 19,839 new listings come on. That's up 7.7% year over year.
Wow, more listings hitting the market.
And that directly fed into that record high we heard about on X 30,000 active listings back in May 2025.
30,000. That number again.
Yeah, and that's a massive 41.5% increase from May 2024. That is a lot of inventory just sitting there.
And the implications of that much inventory, well, they're pretty clear when you look at days on market, right?
Exactly. The average time it took to sell increased to 42 days in June 2025.
42 days. Compared to?
Up from just 30 days in June 2024.
Okay, so taking almost 2 weeks longer on average.
Right. And also, homes are selling on average at 98% of the asking price. Compare that to 100% the previous year.
So no more selling over asking as the norm. What is that 42 days on market selling slightly below ask? What does that really feel like for a seller today and for a buyer?
Well, for a seller, it means you need patience, and probably you need to be willing to compromise on price. Those days of getting multiple offers, crazy bidding wars, they're largely gone in most segments.
And for buyers?
For buyers, it means leverage. They can take their time. They can negotiate. They're probably not going to pay asking price, definitely not over it in most cases.
Makes sense.
It's just a direct reflection of that sales to new listings ratio, the SNLR, being way below 40%. That's the classic indicator of buyer's market.
Right.
And you mentioned condos earlier. If we dig into that market specifically, the numbers are pretty stark.
Yeah.
Condo sales actually hit a 27-year low in Q2 2024. Just 1,688 sales.
27 years. Wow.
Yeah. And unsold inventory is sitting at a record 25,893 units. I mean, that just screams oversupply in the condo sector, maybe even historic levels of oversupply.
Okay, so let's try and connect the dots here between all these numbers and the sort of broader market dynamics.
Right. So that sales to new listings ratio being so low, under 40%, that clearly signals it's a buyer's market, no question.
Giving buyers the power.
Exactly. All that high inventory translates directly into more negotiating power for them. And, while lower borrowing costs, interest rates did come down a bit and declining prices, they did improve affordability in 2025 compared to 2024.
Right.
But the economic uncertainty factor is huge. Things like those U.S. trade tariff worries, the upcoming federal election, it just kept buyers really cautious.
So affordability improved, but confidence didn't necessarily follow.
Precisely. It raises this really important question about the underlying confidence that's, driving or maybe not driving deals right now.
And to really get the full picture, we need to zoom out a bit, right? What are the bigger forces at play here, beyond just local supply and demand? What's shaping how buyers and sellers are acting?
Yeah, there are definitely some major external factors.
And that economic uncertainty we just mentioned. Trade tensions with the U.S., worries about job stability, that's got to be dampening confidence.
For sure.
Then there's interest rates. The Bank of Canada did cut rates down to 2.75% in March 2025. That helped affordability.
But as we said, it hasn't really sparked a huge surge in demand. Not yet, anyway.
Right. And policy changes. Things like the mortgage stress test, maybe loosening some rules like allowing 30-year amortizations again. Those are meant to help buyers.
They are, but their impact seems pretty limited when people are feeling generally cautious about the economy. You can make it easier to borrow, but people still need to want to borrow and feel secure doing it.
Good point. And then the big one, immigration. That's always a huge factor in the GTA.
Always.
High immigration keeps fueling that long-term demand. What was it 125,000 net population gain in 2023?
Yeah, a massive number. Now, recent policy shifts might slow that growth down a bit in the near term.
But the underlying demand pressure is still there.
Exactly. And this is where we hit that really fascinating long-term paradox.
Go on.
Well, we're sitting here talking about record high inventory right now, this buyer's market.
Right. Seems like plenty of homes.
But it's critical to remember Canada's, and especially the GTA's, bigger housing challenge. Despite that huge population gain, 125,000 people in 2023, we're only building maybe 30,000 to 35,000 new homes each year.
Not nearly enough to keep up.
Not even close. So this short-term buyer's market with all this inventory, it exists right alongside a really severe long-term structural supply shortage.
Which has huge implications for future affordability and investment, right?
Absolutely. It really makes you wonder how long this high inventory situation can actually last if population growth stays strong and building doesn't ramp up massively.
Interesting point. So looking ahead then, what's the forecast for the rest of 2025? What are analysts expecting?
Well, the general consensus seems to be expecting a more balanced market as the year progresses, with maybe very modest price growth, like 0.1%.
Basically flat.
Basically flat. But they do expect about a 12.5% increase in the number of sales.
Okay, so more activity, stable prices. Who's expected to be driving that?
Mostly move-up buyers and maybe some investors returning. First-time buyers are largely expected to keep focusing on condos, probably in that $450,000 to $750,000 range.
Where prices have come down the most.
Exactly. While detached homes, typically $750,000 up to $2 million, they're expected to remain in demand mostly from those move-up buyers who have existing equity.
Okay, so let's wrap this up. What does this all mean for you, the listener, trying to make sense of the GTA market in mid-2025?
Well, the summary is, it's definitely a buyer's market right now.
Yeah, very high inventory, over 30,000 active listings. Prices generally declining, that average hitting $11,101,691, down 5.4% year over year. And sales still pretty sluggish, only 6,243 in June, down 2.4% from last year.
And remember those key differences. Condos are facing a really significant oversupply, steep price drops there. Detached homes showing a bit more resilience in comparison.
Right. And the big headwinds are that economic uncertainty, those trade issues hanging overhead.
But there is some hope, maybe, from those lower interest rates and the fact that affordability has improved somewhat. Could lead to a bit of a recovery later in 2025.
And it's just fascinating how that initial sentiment we saw on X, the talk of liquidation, high listings, cautious buyers.
Yeah.
It really does align pretty closely with the hard data we looked at.
It does. Which brings up, I think, an important final question. How much of what we're seeing now is driven by real long-term demand versus just these short-term economic adjustments and anxieties? And what does that mean for the choices buyers and sellers make right now, especially knowing those long-term supply challenges haven't gone away?
That's a great point. So as you navigate any major market like the GTAs, maybe consider how crucial it is to track not just the numbers, but also to understand that human sentiment, the economic forces, and those deeper long-term structural issues like supply. What will you observe in the coming weeks and months that either confirms or challenges this mid-2025 snapshot we've talked about today?
Food for thought.
Definitely. Thanks for joining us for this deep dive.